sales organization, you want 60% or better of your business coming from referrals.
And so now I'm learning that things are not so straightforward like that. That's coming with time, maturity, emotional intelligence.
I started getting into the environment hunting at 7.
Oh, wow.
Because I started to shoot the bow, bow and arrow and learning that.
What I learned is that people don't like the scripted version of you.
Well, guess what? That building was 100% leased, fully spoken for prior to certificate of occupancy.
I think that people don't see that. They just think, like exactly how you said, like it's just like, oh, I just woke up here.
There's two sides to passion, right? There's a harmonious side and there's an obsessive side.
Sometimes you expect the punch because that leaves the person open. So, I knew where to take my hits. I knew when to duck.
He looked at me straight in my face and told me, listen, I'm good whether you make it or you don't. I'm good. You're not.
Welcome to another episode of the Bottom Line Podcast, where we say what we mean and we mean what we say, because at the core of everything that is, was, and forever will be, there will always be the bottom line. Today's guest. All right, ladies and gentlemen, welcome back to another episode of the Bottom Line Podcast, where we say what we mean and we mean what we say, because at the core of everything that is, was, and forever will be, there will always be the bottom line. Today's guest is the one and only Bowtie banker. I've been working with Jim Kroll here. Jim Kroll, aka the Bowtie banker, coming out of Brooklyn, New York, Citizens Bank, right? But we have history going way back to Chelsea days, Bond, New York, when I was a real estate agent, starting out literally cutting my teeth in the city, renting apartments in Lower Manhattan, Chelsea, Lower East Side, West Village, a little bit of the Greenwich Village, but mostly West Village, anything along downtown Manhattan. And I was just still learning. I was still learning a lot as far as like how to talk to people and how to learn the inventory and how to step into sales. As a rental agent, sales seems pretty intimidating because of the access to inventory. And Jim here had this laid back, just real cool disposition. And I don't know if you remember, and I think the first time I really got to talking to you was in one of the backyard events at the Chelsea office. And we used to do like these backyard, I think, beer, wine, and cheese kind of things. And you were just super laid back. But... Say it again?
I think it was a lunch. It's one of those nice days out where it was like, well, I'm going to sit out here and hang out for a little while. It was like, okay.
Yeah, and the thing that struck me about you, everybody was talking about real estate, right? But you were talking about sports. You were talking about just like things going on in the community. You didn't really talk about, I think, and you were lending also. You're a lender, so you weren't talking about or trying to pitch your lending products to us or anything. You were just like, hey, how you doing? How are things going, right? Did you catch the game last night? And I was like, oh, this dude seems cool. I could talk to him, right? Because he's not salesy. And it kind of put me at ease. And I learned something from you that I still carry to today, actually. Is that the deal is never about the deal. The sale is never about the sale. It's always about the people. And indirectly, that's what you showed me, right? So thanks for taking the time, Jim. Thanks for being a guest on the Bottom Line, man. Long time. How have you been?
I've been well, man. It's good to see you again, for sure. And man, when you say it like that, now I'm starting to feel that age is coming on me here. It's been so many years since that Chelsea office, Yeah. It's great.
Yeah.
And that's all, that kind of, I appreciate the introduction. That really rings true. It's, in real estate or any kind of a position of, opportunity, you want to have a relationship with the person you're dealing with more so than just the transaction.
Right.
And for me, I still maintain that same mantra. Every deal's a big deal.
Yeah.
So whether it's a rental agent doing your first sale or whether it's somebody that's been around for a while, but their client is a first-time home buyer.
Yeah.
So always try and help out, always try and keep it smooth and educational, but financing is not too sexy and it's not too exciting until there's a problem, but we try and circumvent that all the way through.
Yeah. Good. Yeah, no, definitely, man. The thing that I think is really consistent, like with the coaching business, I tell people too, right? Because it's like, sales is not, because I do a lot of like talking about sales. So like sales is not money. Sales is not the bag. You know what I mean? Sales is people. Right, and how you can anticipate people's needs, right, and how you can connect with people and build rapport, right, and then you hear it a lot today. Back then we're talking we were coming out of Lehman Brothers right around that time. It was like maybe
2009, 2010.
right? 2009, 2010, something like that. And so there was a lot of uncertainty in the air at that time too, right? Especially in the real estate markets. And I think what I would hear a lot, and YouTube wasn't big just yet, you know what I mean? Like people weren't going on YouTube looking for content. So what you would hear a lot is in the trainings, a lot of the sales trainings, you would hear people say certain things, but you never like saw it carried out. You know what I mean? So like the whole, you know, it's not about the sales, it's about the people thing, to actually see it in action, to see somebody actually have that presence. That was big for me when I was like transitioning into sales at that time. One of the things I kind of, you know, when I thought about doing this podcast with you, you've been through a lot of changes, not just like in the marketplace, but like in your career as a whole, right? So like one of the questions I think about is how you constantly have to reinvent yourself during a transitional period, right? So today you're the bow tie banker. And I found you on Instagram and I was like, oh, this is cool. I like this, right? The bow tie banker. When do you find the right time and how do you reinvent yourself?
It was an opportunity that came up. So first, building a brand. My brand prior to Bowtie Banker was just my first initial last name, NYC. So when YouTube, like you said, wasn't really popular to do reels or short clips, I had a colleague of mine leave the industry and open up a kind of a social marketing company, or a marketing company of some kind that dealt with more online presence. Now, at the time, it was MySpace and Facebook were all the rage. I didn't have either. I really wasn't even on LinkedIn. So he basically says, you know, you're going to be my kind of test subject if you want to do this. Right. I'll help build your brand. You know, we got to do these silly videos and we got to do these different opportunities of constant contact and showing who you are as a human too, not just the sales side.
Yeah.
And that was probably around, I would say probably around 2007, 2008, prior to the market crash, and I look at that because of a benefit at that time was starting out. I was, I was timid about it. I wasn't very comfortable in front of the screen.
Yeah.
And it's not so much of when you start, it's just starting. And it's building a backstop that builds on top of it. So those first awkward videos and those first few posts or articles probably weren't my best presentation, but it was building presentation and comfort and drive. So Bowtie Banker came out probably about 5 years ago or so, where we were at a wedding in Louisville, Kentucky. Just our niece was getting married down there. So we flew down there with the family. And being Louisville, it's a bourbon country, and it's one of my favorite spirits out there. So I said, okay, well, let's not only see the wedding, the kids have school off. So we said, let's make this a long weekend and hit Daddy's Disneyland, all the different bourbon shops and different tour. But we went through one, and it was Woodford Reserve, and it's the bow tie I'm actually wearing right now. And it was sitting on a mannequin because you can see in there there's all bourbon stills as a pattern.
Nice.
It was sitting on a mannequin, and I don't know if I was wearing a tie and a suit and presenting myself well, but it was, how can I differentiate myself just from J. Kroll NYC to, another mortgage banker or broker out there?
Yeah.
So I said, if I can tie this bow tie in this store right now, I'm gonna buy it.
Right.
And so I had the receptionist holding a mirror, my wife holding the YouTube video, her phone to see the YouTube video on how to tie a bow tie.
Nice.
And I was able to accomplish it. And after wearing it a few times, there was a recognition physically and, just on my posts and like, my LinkedIn pictures, and it had a lot more traction. So that's when it kind of came about. And that's where the brand Bowtie Banker really solidified it. It was first to start in like 08 and 09 to build a backstop of, some data points and, LinkedIn profile things. But it was more so of, it's the blessing is now a curse because I can't go out in the suit without a bow tie.
Who are you, right?
Hey, the Bowtie Banker. Where's the bow tie?
Yeah.
But all kidding aside, it's great too because I'm aware and appreciative that not too many folks can actually pull off a bow tie. And fortunately, with my physique and or personality, it does work. So it's a win-win across the board, and it's easy to remember.
Yeah, so I like that, right? I'm one of those guys that I've always felt like super self-conscious about bow ties. Like when I probably once or twice I put on a bow tie, but my biggest problem is I don't know how to tie one, right? So it's like that is like for me, it's like okay, it takes too long to do that. Even learning how to tie a tie, my father taught me how to tie a tie, and we do it differently. Like we do it on our foot. Right, it's like an old school way of doing it. Yeah, it's like he learned from a tailor back in Haiti, right? And so I saw him doing it one day. We're young kids and we're going to church, and he put on the tie, and I'm like, oh, I don't know how to do it. We had the clip-ons, right? And you feel I was a little bit more mature. I felt like I was a little more mature. I was like probably 10. I wasn't that mature, you know what I mean? But like I felt like I was more mature, and I wanted to wear a real tie, not a clip-on, right? So I see him tying his tie on his foot, and I said, dang, I'll never learn how to do it. So I didn't want to wear a tie. I think around 15 or 16, I learned how to tie it on my foot. And that's how I've been doing it ever since. It's like the dentist way, right? I don't know anybody else that ties a tie on their foot. And it's about the knot too, right? So two things that I learned about, because there's different knots, right? And a couple of things that I learned is that each knot says something about your character, your personality, how you express yourself. And the bow tie stood out to me as like the most understated fashion trend that a certain specific kind of man can pull off. You know what I mean? And I think it was about the size of the bow tie, because some of them are smaller, some of them are bigger, right? So there's a level of confidence, there's a level of how particular you are when it comes to your self-expression, right? That a guy like you would have to be consistent with, right? To show why and how to actually wear a bow tie correctly. You know what I mean? So that's something that I think is it's unique in its own. And when I say unique, there, in business, there's like the value proposition where you see have a lot of people have like the value proposition for their business, but there's like this unique value proposition which ties in with your brand. You know what I mean? And so what you did. Yeah, what you did with the bow tie banker, I think you were a trendsetter, because I don't think a lot of people were thinking like that back then. I don't think a lot of people were thinking like that. Like, just how do I stand out from the crowd? So another question I have.
It's gained a lot. It's gained a lot of popularity, and a lot more folks are doing it with that distinction or that kind of just extra niche of what makes you better than another bank or another mortgage banker or broker. And it's not so much that I'm, quote, better, it's just I'm a different person. If you just want to call up and get a rate quote and move on, I'm going to have a rate quote and I'm going to be competitive. But I'm kind of the one that, I wanted education as my initial background, not business. And so I kind of want to educate folks along the way. And I'm also a talker. So it doesn't bother me to sit there and chat it up, when the time is right. So as long as you use your time effectively, but you give it time, like we talked about earlier, that's the building of the relationship. It's more than just a transaction. And it's twofold too. From, when you were a real estate agent, you refer me to one of your clients. I want that client to have a great experience, not only for that referral partnership to continue, but also to build that future referral business with that client. So they then tell their friends about me and things like that.
Right.
But it's a third layer also, is because not only do you trust me with your referral, but if that client has a great experience in a real estate transaction, they're going to remember 5 or 7 years down the road. Yes, they're going to know more people, and they're going to meet other realtors or other mortgage bankers along the way, but they'll always remember that original group, or not remember, depending on the experience. And you want them to remember, because in that 7 or 8 years, when they go to buy another place or a second home or move, or whatever they want to do, you come into the forefront. And that's where definitely that brand recognition, the bow tie banker, is like, remember that bow tie guy?
Yeah, the bow tie guy.
Like something like that. Something like that really brings, the remembrance. And I mean, that's where I was going with it from the beginning of, I own regular ties for more of my kid to use, but like the only clip-on bow tie I have is just one that's really fancy from Charleston down in the Carolinas, and that's made out of bird feathers.
Oh wow!
So you can't self-tie that one.
It's
a really fancy one. But the self-tie also differentiates it, because when I was a kid going to church growing up, I had clip-on ties. One, because you could wash them. You could throw them in the wash because you always made a mess with the kids. But two, it was that coming to the age to ties yourself, whether it's a half Windsor, double Windsor, whatever. I don't know all the different names. You probably know 14 different names of ties, or knots, where the bow tie is pretty easy. It's pretty one step. I mean, one style. And then it's, depending on the mood and I've got everything from the more conservative look to I do have one of the big fancy black ones for a kind of a tuxedo vibe, so it's like over dramatized.
Yeah,
which is great.
Accentuate.
So it's fun. Yeah, I mean, I come from a unique. I know that's one of the bullet points out there. I come from a unique lineage that brings me to becoming a mortgage banker. From like I mentioned before, I wanted to be a teacher originally, so I did like education programs in high school where I actually taught first grade for half a semester. Realizing how difficult that was, I got into business.
Yeah.
So I went to marketing. At first it was accounting, and then my peers, as I looked around, I realized I was more of a marketing major. Just from my personality and love for numbers, and going from different market research firms, and that's how I got a job here in New York. I was on a temporary 2-week window of searching, and I got a job at 17 magazine because I had research experience.
I remember
and 17 magazine is teenagers, mostly caters to teenage girls. And so, my market research analysis was on, chocolate types and brazier sizes. And,
that's it right there. Okay. Because I was trying to put the pieces together. I couldn't connect that to. I was going to ask you about that. So hold on. I'm going to slow you down just a little bit, right? Two things you mentioned. And I want to pick your brain here a little bit, okay? Because I have my own biases, I guess you want to call it, right? You said you were teaching. Okay. You were teaching like what, first graders you mentioned?
Mm-hmm. Yep.
Okay. I was talking to my son just yesterday.
Like education child development program.
Okay. So I was talking to my son just yesterday, right? And we were talking about teachers, just general teachers, right? And how he loves his new teacher right now because his teacher is straightforward, holds him accountable, right? And treats them like little, adults pretty much, right? And so I said, women are great teachers. Men don't have patience for that. We're not that good at it. We can teach you other things that we're going to have to interact with you in order for you to learn. But as far as like standing there and trying to crowd control 30 kids, hats off to the women. They have the patience for that, right? Right? Because I don't know how I would do that without losing my patience. So I wonder, okay, how long were you teaching, number one? And number two, how did you even fall into that? Right, and then how'd you get out of it and go into market research?
How I got into it was my mom was a teacher. She taught special ed kids. She worked at a special education school, so all the students were special needs of some capacity, whether that be Down syndrome, autism, any kind of variance. And so, seeing her, and it was wasn't necessarily in the neighborhood, but I'd gone to her school a few times. And seeing the impact that she would have, especially on these special needs kids, was, that's empowering. You look up to your parents. My dad was a insurance salesman, he's a traveling salesman that did commercial insurance. So my dad was the salesman, my mom was the teacher. And so through teaching and going to church and Sunday school and taking an active role and participating there, I had fun with the kids. So it was fun to go over the lesson plan that was put out there. I didn't really do much work in those environments.
Yeah.
But the high school I participated, or that I went to, had a participation where if you did 2 years of child development or child education, that second semester of the second year, you can actually go to a school at like noon, that second program, and be part of a lesson plan that would, you'd kind of shadow a teacher basically for the afternoon. And then the teacher would give you an opportunity to create a couple lesson plans. So I created like how to say your name in sign language. So doing a billboard with all the letter, like hand drawing all the different hand signs, and, learning out how to say like my name is, and then whatever the letter is. And J obviously would be that. Wow. It was so much work to do that for like a 15-minute experience, like a half an hour experience. Or how long it took. Yeah. That I was just like, oh, this is a lot of work. Yeah. And how much they get paid? Yeah. So it was the reason the transition shift from education to business was more of a financial awareness. Got it. It was one of those kind of, be the breadwinner for the family in that generation of, growing up and being a child of a baby boomers and work hard, son, raise a family. Yeah. That kind of stuff that really kind of drove me to go towards business, because it was either business or education for me. And as you can tell with the gift of gab and sales ability, business has been very lucrative and affordable. It's been a benefit to my career 100%.
Yeah. So I like that. I like that about you, Jim, because that's what made me feel at ease with you, right? your gab, the way I think your perspective, right? Because you had mom was the teacher. So in sales, you got to do a lot of teaching, right? Especially with lending, you have to do a lot of educating around the rates, around the markets, around PMI, whatever it is. You're doing a lot of educating, and it's not so straightforward. So you have that ability, and it's crazy. I didn't know that your mom was a teacher and your dad was in sales, because you merged the two. And look at you, like you said, you're really successful. And I can imagine how people feel around you, because you know what it is. You know, the guys are the worst, right? Like, we think we know everything, and everything is like, combative, kind of like you don't want to get shown up in front of your wife sometimes. And here's Jim here, right, who's like, no, don't worry, chill out, I'll handle this, kind of thing, with that kind of attitude. So I think a lot of guys would be like, want to talk to you one-on-one first before they bring their wife. And then, but you have that disposition where it's like, no, I've got this way of explaining it that it's not going to be confrontational, right? And I think that confrontational side of it is off-putting, because a lot of people don't educate around the sales process or around getting closer to the close. You know what I mean? Which you seem to do so easily. Yeah.
Yeah. So, I don't know. To be in sales, you have to have the kind of, to survive in sales, you have to have that kind of go-get, that type A personality, and you need to have that kind of the thrill of the hunt, the feeling of victory, but you also need to have the thicker skin of defeat and disappointment and fallout that occurs. A lot of people in my industry are very A-type. Growing up, I played sports, and the goal's always been there, the fight and the challenge of working hard for it. And I find that how you get to the finish line, and when you're at the finish line, is just as important as being there. Like crossing the finish line. So, when I said it before, and I consistently use it as like my kind of cliche is, every deal's a big deal. So whether somebody's buying this $3 million apartment, putting 25% down, clearly they've got a large asset base or money in their pocket, versus the person who's buying a $300,000 studio, and they're putting down 10%, and that's the biggest investment they've ever made, and they only have like another 10 grand left after that to live, and so you cater to them the same way across the board, because that $200,000 buyer has introduced me to those $2 million buyers at the same time, and they're like, wow, this guy's great, he was really patient, blah, blah, blah. Because everybody has their own personality in it. I find through the education side of it, and when somebody wants to be rushed, I'll rush. When somebody wants to slow it down and have a better comfort level, that's my wheelhouse, and I'm happy to help. Yeah, because it is an experience, and you want to have, anytime you do, whether you're buying a car, you're buying a house, you're moving, you want to have those experiences that you have a good recollection, and also understanding of what the hell's going on. Excuse my language. So like, what the heck's going on, and being able to say, hey, I know what's going on, because I know where I was in the process from start to finish, because I was made aware. Even though this, nobody gets mortgages on a daily basis, even though I work in it every day. But I'm respective of that perspective too, because this isn't something that you do every day as a consumer or as a borrower, versus somebody like myself. So it's like, I know there's stresses, and you have a full-time job, and now you got me asking you for bank statements and annoying you. I annoy you with a smile and just ask once. I try not to ask for the same thing 5 times over.
There you go. But then you've also been through, like, you've had your own transitional experiences that have helped with that. It's like the way you grew up. Like, tell me about how you grew up a little bit, right? Because the way you grew up is not the standard go to school, get a job, or you grew up a little different, right? Tell me a little bit about that.
Well, I've had a good opportunities and flexibility of my interest in variety, aka my ADD and ADHD, has taken me on different adventures. Because I'm not a guy that likes to sit still. So prior to moving to New York City in December of 1999, I probably moved on an annual basis, rentals, like kind of hopped around, did summer jobs here and there. I grew up in Rockville, Potomac, Maryland, right outside of Washington, D.C. Went to a college originally, right out of high school. My parents had 2 options: either go to college or you go to the military. That was it. Yeah. And if you went to college, they're going to pay for 1 year. And that, I know. I was like,
that was an easy one.
I'm in for college.
Yeah.
And And it was funny because the offer was for 1 year of college. You get 1 year, I'll pay for.
Oh,
Like,
wow.
oh, that's it? And then my dad said, yeah, if you pass and you have good grades, I'll pay for another year. If you pass and you have good grades, I'll pay for another year. He goes, but you got 1 year, don't screw it up.
Yeah.
So I wasn't really serious at the time, and I worked at a Bennigan's, a restaurant, the opportunity to go to a community college and still work and hang out with friends.
Yeah.
And not until I realized, like, that last day before you can withdraw, before any effect on your history, I did, because I knew I was just slacking off and that it wasn't serious.
Okay.
So my father goes, well, you got one more semester.
Yeah.
And I
One
said,
more to
well,
go.
I'm gonna take a pass. So I did not a gap year, but I did basically a gap semester where I didn't do anything but work 3 jobs. You know, I waited tables. I worked in a men's clothing store, like an equivalent would be like an Armani Exchange.
Okay.
It's no longer, the brand is no longer there. And then I was a roulette blackjack dealer at a Firehouse Casino on Friday.
Get out. Super random.
So, like,
wow.
I was working 6 different jobs, like 6 days a week, 3 different jobs. I mean, I was making money, but on Sundays when I counted my money, I was like, oh, God, I'm beat.
Wow.
So having the benefit of basically burning the candle on both ends for work, and, you know, seeing that, you know, maybe if I went to college and took it seriously, that I would probably work a lot less for the same pay, meaning like the structure of benefit. I then applied to a small college in Winchester, Virginia. So it's like right below the Panhandle in West Virginia.
Okay.
I was into hiking, mountain biking, canoeing, and all that stuff. I played lacrosse, and there was a Division III college program. I played lacrosse for a year. My parents and we're going to pay for 1 year. All of a sudden, I had 3 children in college. So they said, well, you each get 10 grand. That's all we got.
Wow.
And so, where my siblings were at Penn State or Valparaiso, or private colleges respectively, I realized that after having to quit lacrosse to then take a hotel job to help pay and take out student loans wasn't necessarily the direction I wanted to go in.
Yeah.
So, and then I recognized also the college I was in wasn't an accredited business school. So I wanted to get a little bit closer to home, applied to the University of Maryland in College Park, got in. Their business program has exponentially grown over the years since going there. So it was a great move, not only to bring it in to help my parents with an in-state tuition, but also for the benefit of a better business school and a better program.
Sure.
You know, I didn't play lacrosse at Maryland. That's Division I and a lot more serious. I took the fraternity, and I'm going back into the restaurant role.
Okay. Forget the
Became
lacrosse.
a lot more popular there.
Yeah. Gotcha. Okay.
But, you know, and then graduated in Maryland in 1999, but didn't have any. Again, one of the summers off from school, I had the opportunity to go live in St. Croix in the U.S. Virgin Islands. A friend of mine took a gap year and lived down there. So he says, hey, you want to live this summer? I got some contacts.
Nice.
So we went down there. The summer before, I'd worked in Nags Head and visited a buddy of mine at I worked at Carnival, where you just line up every day and get paid, like, you know, $5 an hour to sit around and do nothing. So a bunch of derelict kids.
Yeah.
But like, you have this variety of folks that you run into along the way. And in St. Croix, I was working in a restaurant. So I started building my love for culinary. And then I came back to school and graduated. You know, I love the islands. I love to scuba dive. I like water, and had an opportunity to actually move to Hawaii to live in Oahu.
You've lived in really cool places, man. Yeah.
Yeah. We had a family reunion. Everybody was saying, "What are you doing to college when you're done, James?" Everybody calls me James, my family.
Yeah.
And I was like, "Well, I don't really know. I kind of had a job lined up and a direction to go back to St. Croix, and it fell through at the last second. And so my cousin from Wisconsin had just moved to North Shore of Hawaii with the military. He's, you know, Army Ranger, West Point grad guy.
Okay.
And he called me up and said, "Come live in Hawaii." And I was like, "All right."
Wow.
So I stayed there for a few months, but realizing that I wasn't in tune to real estate at the time.
Okay.
So outside of real estate, military, or tourism, that's really what Hawaii commerce is. And I didn't want to work like as a copy repair salesman or something like that. I just had that in my head that I was just like, this is not where I want to be when doing this here. So bought a motorcycle in Monterey, California, drove along the Southwest for about 10 days and just seen a bunch of stuff different tourist spots like the shoot at the OK Corral at Tombstone, Arizona. It's like there's been a fantasy of mine from watching TV.
Nice.
And landed with a buddy in Miami, stayed with him for about a week, and then moved up here on a whim in New York City. Slept on a platonic girlfriend's couch, just a buddy. He's like, sleep on my couch for a week, see if you can get a job. And so I basically couch crashed for 2 weeks. And the Thursday before I was leaving, I got this call from 17 magazine for a 2-week employment, $25 an hour. So it was like a high paying gig.
Gotcha.
It's exactly what I needed because I was out of money at this point. I've been
Nowhere to sleep.
Hawaii, bought a motorcycle, went across the country. Need a job now.
Wow.
I'd bartended in college, so I'd had some savings, but not
not a
couldn't
lot.
keep that lifestyle. But what was it? It was that job landed me a temporary the money to be able to get a temporary apartment.
Now, is that where the chocolate and braziers came from? Because I was still trying to figure out where the chocolate and brazier came from. Like, how did you? Where did that come? Was that 17?
Yeah, 17 magazine. So it's like, I'm 25 years old, and I'm in an office an open air office with 30 women and a couple other gentlemen. And
Gotcha.
I think it was I had a shell necklace. I wore rings on my finger.
Oh wow!
They all loved me. They all loved me with all my stories.
Yeah.
And I was like, this is great. This is what New York City is like. But the two, it was so funny because that's what it was. I was doing market research, analysis of different, braziers, chocolate, TV shows I'd never heard of because I never watched Dawson's Creek.
Okay. Right. I did.
What's Dawson's Creek affecting your life?
Right.
But it was great because that then gave me the opportunity to then get a full-time job, or then get a temporary job at Morgan Stanley. It turned into a 5-year career. So it's one of those finance guys in operations, and my old boss quit to open a mortgage company. During the height of the investment before Lehman. So I got into this industry in 2005.
Okay.
So so I had a good solid 3 years of, opportunity to build a business before the market crash.
Yeah.
My now wife, I want to say my girlfriend, now wife, but my wife that we've been together 17 years, she was working in finance at Morgan Stanley as well. That's how we met.
Oh wow.
So she gave the comfort and security of health insurance and a job that doesn't live by commission.
Right.
And we were pregnant with our daughter.
Okay.
So it's like, okay, if I'm going to make a career change and a jump from finance into the mortgage industry and mortgage broker, this has got to be it. I mean, you just kind of rip the Band-Aid and go.
Yeah.
And so it's great. The hiring manager, which was my old boss, I kind of told him I needed to at least pay rent. So gave me a really small salary.
Yeah. Got bills, got responsibilities now. Yeah.
Yeah. It's it was just boyfriend, girlfriend with my now wife, but
right.
It was getting serious. No, we had just got married. That's what it was. We just got married.
Yeah, that's pretty serious, Jim.
Okay. Yeah. No. We had she's 7 years from my senior, so she's 7 years from my senior, and we had 4 years of 5 years of dating. And she was like, after that 4th or 5th year, she was like,
what are we doing? Yeah. Time's ticking.
What's going on?
Yeah.
Getting a little old. But no, it's great.
I love
it.
it.
Yeah, no, it's been awesome.
Yeah. So what's crazy about your story, Jim, and I thought about this just now, is most people work hard, right? So that they can go have an adventure later. But you had the adventure, and then now it's you're still working hard, but it's still from that perspective where it's fun, it's something to learn. It's exciting, right? And so the adventure side of it is always still there. It sounds like, right? You're still having an adventure, right?
Heck yeah! My 30th birthday, I spent running with the Bulls in Pamplona.
Wow!
During the San Fermin Festival. I know. I tried to do it. I was 40, and my wife said no. I have kids.
Yeah. So that's cool, man. I think your story is exactly what a lot of people because nobody knows, right? It's the road to success is not a straight line. You know what I mean? And you'll hear that again and again and again. It goes in circles. It goes here. It goes there. It goes everywhere, right? And until you really figure out what it is that you're is pulling you in, because this is what happens, right? I think a lot of people, they don't know what's going to pull them in. Like me, I fell into real estate because I kind of watched. I read a lot about what's his name, John D. Rockefeller. And then at the time, I think you had the other guy, Hilton. You see a lot of Hilton hotels, right? At that time, I was a kid. You see Hilton, his name on a building. And then you got Trump Trump's name was on the building, and that's what I like influenced me to get into real estate. I always thought that was cool how these guys can just like come from nothing and put their names on buildings and these skyscrapers, right? So, you know, growing up in Queens and in Brooklyn, you go into the city, it's like, you know, Radio City Music Hall and Rockefeller Center, and you know, this is like, as a kid, you're like just blown away, and then you see somebody's name on a building, that is, you know, that pulls you in, right? So that's how I kind of like I got attracted to real estate. But you sound like you had an affinity towards people. Like you've always been drawn, I don't know, to people, right? Going to Hawaii, going to, you know, St. Croix, different cultures, right? Different value systems. And then you found yourself in lending and you kind of like merged everything. And then you got married. I think that's when things got really serious for you, when you got married, when you started, you know, the 5-year relationship. So lending was really okay, because lending can be a job that you do and then it's kind of like, all right, just to pay the bills, but you're really passionate about it, man. So how do you differentiate between passion and purpose? Are they one and the same?
Well, in any sales role, you're going to have different highs and lows, right? Whether you're, you know, killing it and just business is flowing,
yeah,
and it's great. You know, the lows are interest rates are 20-year highs. Nobody's refinancing. People are sitting on the fence on waiting to purchase, aka right now in 2022.
Yeah,
you know, it's the passion of education and going out. One, it allows me during these slower times to be more passionate because I can go out and I can present and I can educate more because I'm not getting the constant phone calls off the hook.
Yeah,
I'm not being delayed for those phone calls. I feel like I can then have the freedom to go out and be and see more people and touch, you know, and especially nowadays as everybody's looking to get out a little bit more so post-pandemic.
Yeah, yeah.
The purpose of moving into this role and the passion of this role is twofold. One, you know, the reward of, like any sales job, the work and reward come hand in hand. So when you work really hard at something and you get rewarded for it, the harder you work, it should be a higher reward.
Yeah.
The folks that come into this business as a mortgage professional, brand new, see my perspective and they say, well, that's great. Like you said, it's not a straight road. Well, of course it's not, because I benefit from my years of passion that continue to give me purpose and continue to give me income to be able to allow me to continue to do this and still live in New York City, raise a family of 4. You know, it's not easy, nor is it cheap, but it's available and I still want to do it.
Yeah.
You know, it's not something that has turned me off yet.
Yeah.
You know, and I'll keep doing it then as long as I'm enjoying it.
Yeah.
As
Gotta enjoy
I've been
it.
enjoying it, you know, the diversity of New York City is always an attraction of mine. I mean, my wife is from Venezuela. My oldest daughter is bilingual, fluent in Spanish and English. And,
Amazing.
You know, there's nothing but arts and creativity between my 2 kids. And it's one of these things that, you know, this area and this market give that availability.
Yeah.
Every day when you walk out the street.
Yeah.
You know, whether it be the clanging of the cars going by and the utility workers throwing crap around.
Yeah.
You know, or you're going to a Philharmonic in the park, you know, and throwing a, you know, blanket and drinking a bunch of wine subtly, quietly in the park.
Right. Because you got a ton of it.
Yeah.
Right.
So, but no, it's you know, so as long as you can kind of keep the fun of it, I think that's where the passion stays. You know, the purpose is to, you know, earn for the family and to, you know, build an opportunity for their travel and or just good quality of life for kids and do better kind of thing.
Yeah.
But that's his purpose. The passion is when you enjoy what you do.
Love
that.
that.
I like this stuff. It's fun because I can deal with numbers pretty easily in my mind, and I'm geared towards that. And I'm a kind of a quote people person.
Yeah.
That likes to meet new folks. Like when I bartended in college, I loved that job because every time somebody sat down, they had a different story and a different opportunity to share that both you can either grow and learn from, or you can just appreciate and respect.
Nice. And it gives you a reason to put on a bow tie, right? you gotta have a reason to put that bow tie on.
Well, post pandemic, purposefully. I mean, like, you know, the sweats and the t-shirts. You got to kind of start getting back to shaving and you know, ironing and
right.
going to the dry cleaner even though you don't want to.
Yeah, I need that. I gotta feel like I'm doing something. So I gotta get dressed. I gotta feel like I'm doing something. Otherwise, I go too much in the opposite direction. I'm like too chill. You know what I mean?
Yeah, that happened to me a little bit during
Right.
the beginning of the pandemic when rates were super low and I was super busy. It was like, well, I'll just focus on work right now and put on a couple pounds, kind of
Yeah, up and
let
down
it
with
go
the
a little
weight.
bit.
Yeah.
Yeah, but now I'm back in the gym and getting back into core focus because again, it's a cycle in this world of sales because sometimes you're really busy and really high on the kite kind of thing, or high, in cloud nine, just
Yep.
doing everything right. And then you get these flow down periods of lulls that you need to refocus and say, okay,
Yeah.
well, where's your passion?
Yeah.
Well, now I've got an hour and a half. I've always had the time, but I'm going to prioritize it easier now to go to the gym.
Good.
I can prioritize it easier now to go pick up the kid at school. I can
Yeah.
prioritize it now to have a cup of coffee with the referral partner and just say hi.
Nice. Yeah.
And I got the time to sit and hang out with you for an hour.
Yeah, let's do it. Yeah. While we're on the subject, right? So I have a question for you because everybody's looking for a come up, okay? Especially after the pandemic. So like I've been following a lot of economists and a lot of them. So like I listen to Bloomberg and I listen to another one is Kitco News, right?
Okay.
And they're both really good, but they're very they're like polar opposites almost, right? You get information from different places. There's a lot of misinformation out there. So I like talking to people directly, people with boots on the ground, know what's going on in different markets, right? And I think most people are looking for a come up right now. One thing that you and I talked about, touched on, was home buyers being able to buy in low and moderate income producing neighborhoods, right?
Mm-hmm.
Now, it sounds like a mouthful, sounds like a lot, sounds like it's super confusing. And if you talk to maybe 5 or 6 different lenders, they're all going to tell you different ways to do it, right? From you, somebody who's been in the game for as long as you've been in the game, you're a veteran at this, right? Let's talk a little bit about that. If you can educate home buyers right now about how to purchase and some of the incentives around how to purchase low income and moderate income homes, how would they go about it? What does that look like?
Sure. It's the low to moderate income areas are defined by the census demographic of that area.
Okay.
So, every 10 years they do a door knock and they say, how many people live here? What do you make? They keep track of that annually on a less structured basis. So every year they look at different areas and it's by zip code and it's by property address. One address might be different than across the street. So there's low, moderate, middle, and upper income. Those are the 4 categories.
Okay.
The main focus is on lower moderate because upper and middle income folks don't need government assistance. They
Right.
should, by their right, be able to afford and not need a subsidy or a program that's made specifically for these areas.
Mm-hmm.
Now, why are these programs specific to the areas? Well, it goes back to, it's called CRA, Community Reinvestment Act. It's back in 1974. 1974, the government came out and they said that lower moderate income areas were being underserved by lenders. They were being redlined, charged more money. They were just being abused in a way that, there's lower moderate income area folks, whether it was just didn't have the knowledge in these areas, whether that be under the assumption that they just had less education, less knowledge, or whatever it was, the government came in and said, hey, we need to do something about it. So as the government put these mandates to lenders, if the property falls in a low or moderate income area, that property, regardless of the borrower, should be able to get a benefit to help improve that area. So if they're a middle income earner, or upper income earner, but buying in a low to moderate income area, they're obviously going to boost that area with purchase power, with community action, with investments in the property itself or around that area. So buying it's not the person that's looked at, it's the property of where it's located. And again, it's based on the census demographic and how it's run. The website is ffiec.gov. That's just the government entity that runs it. So whenever we look up a property and talk to somebody, plug it in. 6 different banks have 6 different programs. Eagle program, low mod program, CRA, whatever the name of it is most important. But if it falls in that area, that the inquiry of what options are available because it's in low to moderate income area. What options are available? Sorry, it's a long way of giving a little bit of history, but the options that are available for it are a reduced interest rate.
Okay.
Are down payment assistance programs. So it can be up to 5% of the purchase price or $3,000.
Yep.
Because obviously it's for lower moderate income folks. So we're not talking about $1 million properties. We're talking about properties where the loan amount does not exceed $647,200.
Okay.
That's kind of what they call the conforming loan balance.
Okay.
Because if you're buying or borrowing more than that, again, you're kind of in a middle income, upper income basket. You're not. If the property is more than that, then that's not helping low to moderate income area folks.
Yeah.
That's helping investment bankers buy a house.
Yeah.
That's bigger than this 647 number. So as long as the loan amount, and there's criteria, that's what I was getting at. There's criteria around it, not only of the location, but the loan amount. So if it's under the 647-200, you get reduced interest rates. You can take the option for down payment assistance programs. And those down payment assistance programs are typically forgiven if you stay in the property or for 5 or 10 years, respectively, for the two different programs that are out there.
So it's owner occupied. You got to be an owner occupied.
Only owner occupied.
Yeah.
For the banks that I've worked with and for, it's always an owner occupied property.
Got it. And then what does the person have to make? I'm sorry. What does the person have to make, like salary, annual salary, so they can qualify as low income, or like what's the salary?
So the property itself is what qualifies.
Not the individual, not the borrower. Got it. Okay.
The only time the borrower qualifies is if it's not in a low to moderate income area, and they make 120% of the median income in that area. Then they can benefit from these programs buying outside of the lower moderate income area.
Okay.
But for example, Brooklyn, the median income is $88,000.
Okay.
So buying a $600,000 property with an $88,000 salary is a stretch for affordability, but it's right at that cusp. So if they don't have any student loans, they don't have car payments, it might squeeze in to that low to moderate income area, and the borrower being able to have their extra component.
Gotcha.
So the borrower's income comes into play, but it's not. The main focus is on the property.
The main focus on the property, the asset itself.
Correct.
Yeah. Gotcha.
Yeah, because a different way of putting that in perspective is if somebody makes $85,000 a year, they're not buying in Manhattan at $1.5 million property.
Right. No, they're not doing that. They're still renting an apartment.
Well, in that program, and then it's just not a value add because the loan amount would be over $647,000. You fall out.
Gotcha.
So there's a lot of. It's not so much loopholes, but it's more check boxes to make sure it fits. And the easiest fit is the property location, being in a low to moderate income census demographic.
Okay. Yeah, I think that pretty much explains it, right? It's hard to understand when you don't know too much of the background information, and then it just sounds like a headline, and everybody goes crazy trying to figure out if they can get this thing, right? And then they all wind up, it's like the blind leading the blind. So I'm glad that you're able to give us that background information, because even me, I'm looking into it and I'm like, well, okay, is it the individual itself, or is it the property? And no, it's the property. The property has to qualify in those neighborhoods, right?
Yep.
Just to make that clear, right? So have you been working with people and helping people understand this? Like, is this something that you've been seeing a lot, like post-pandemic, that people are asking questions around this, and that people want to buy these properties, or is it less and less since say pre-pandemic?
I would say it was more and more since the beginning of 2022.
Okay.
Not so much pandemic related, but more so interest rate related. So these programs had always kind of been a little bit cheaper, meaning a slightly lower rate than standard conventional bank rates. So when you go online, the disparity or the difference nowadays is a lot bigger because rates are so high that banks are just working on thin margins and making as much as they can, but not overcharging.
Yeah.
That this government subsidy kicks in and it lowers the rate by 0.5%, or 0.25 or 0.5%. So in reality, this has always been there. And
it's always been there.
It's always been there. Every time I've gotten a property address, I've looked it up and seen if they benefit from it, because I've been telling people about this. And this goes back to where you were selling in West Village, Lower East Side. A lot of those folks would also kind of kick across the river into Brooklyn.
Yep.
And if you're buying in Brooklyn, a lot of those neighborhoods fit in the low to moderate income area.
You got it.
So I try to consistently educate folks of saying, hey, it might not be a Manhattan property that qualifies, but if you have a client that's buying in Brooklyn, Queens, or outer boroughs, give me the address. I'll look it up in a heartbeat.
Yeah.
Because it's just going to a government website and doing a population search. And from there, from the beginning of 2022, since we started the year at a 3% interest rate environment, now we're above 7%. That differentiation of having a 0.25 or 0.5% lower rate is huge.
Yeah, yeah.
So banks are actually they're having their representatives like myself, like loan officers, make sure that they're kind of giving the attention to this low to moderate income area, because as the market has slowed down in volume across the board, when auditors come in and look at banks, they want to see if there's a good mix of this portfolio, conventional, and also these low to moderate income areas, to show that the bank is also diversifying their lending footprint.
Got it.
So there is a bigger attention to it now, because there's such an awareness for that extra push of the lower rate, and the difference between a conventional mortgage and the LMI, they call it low to moderate income areas, is so much bigger that it's why not take advantage of it. And you know, if you're talking to me versus another bank or another banker that just doesn't know about it, one, it helps me because I'm going to hopefully win that business because I'm offering a lower rate, whether they know about it or not. When they come back to ask me how I got them a lower rate, that's when I usually educate them on, because you're in a CRA area.
Yeah. Until then, they don't really know.
There's a little sales tactics there, but you know, the goal is always to help out the consumer and get the best deal.
I remember, and that's how I ended up back in Brooklyn, right? Because I remember when they were building out Barclay Center, a lot of Upper West Side, Upper East Side homeowners were selling so they can go buy in Brooklyn because of Barclay Center. And I remember, you know, and this is why I think people get confused too. Like a lot of these, the properties that you're talking about, they're for owner occupants and not for investors, right? So like you have to occupy that space. But I remember that migration from like Upper West Side, Upper East Side into like Cobble Hill, downtown Brooklyn, you know, Brooklyn Heights. I remember that, and I was like, ooh, this is sick. Like I need to be in Brooklyn, right? Because a lot of people were moving out there, and I wasn't getting any activity. And at the time, Bond didn't have too much inventory in Brooklyn. One thing that Bond also didn't do, they didn't do a lot of FHAs. They didn't do any. In the city, nobody does FHAs. Everybody's a conventional borrower. Most 9 out of 10 people are conventional borrowers. So you go down to the city and there's nothing but, you go down to Brooklyn, there's nothing but FHA activity going on down there. So I was like, I'm missing out, right? So I go down to Brooklyn, and the people who are buying or looking at condos and co-ops, primarily co-ops in Brooklyn, you know, they were looking at their backup option being a brownstone or, you know, something they can occupy in a more desired school district in Brooklyn, right? So at the time, I didn't know too much about what was going on, like on your side of things, on the lending side of things. But when you referenced it just now, it kind of just like brought up those memories, you know what I mean? And I'm like, okay, so it's been there, it has been there, but people are just not aware of it. And now the people are becoming more aware of it. It's becoming more common, right? Yeah.
For the bullet point of the conventional versus FHA, FHA is prevalent throughout the outer boroughs for multiple reasons. One, FHA does not do co-ops. So, you know, the New York City market, apartment living is predominantly co-op.
Right.
So FHA doesn't do any co-ops at all, just income like how they have the restrictions with the co-op boards. FHA wants nothing to do with it.
Right.
FHA will do condos, but you need to have the building approved under FHA's platform, not conventionally.
Right.
That requires typically a few $1,000 investment on somebody's behalf to get FHA approval in place. So new construction, outer borough, smaller price point condo development has gone and made a point of getting FHA approval in advance. Where at the same time, FHA in the last few years has increased their fees exponentially, both on their mortgage insurance monthly and their upfront MIP, mortgage insurance premium fee that they charge at closing that they tack on top of the loan.
Wow. So
typically, unless somebody has really bad credit, meaning like under 680 or 620, I would not go FHA at all. The only reason why you go FHA is because of a low credit score, low down payment, and a multifamily. But if you can go conventional, meaning that if you have a good credit, you can still do the same loan sizes with 3% down as a conventional loan. If it's in low to moderate income area, you can do 3% down and get a closing cost assistance. So it's almost like 100% financing. I mean, it's insane. So that's where FHA back in the day, 2008, 2011, probably was pretty popular because people had lower credit scores and they saw this quick fix. Conventional lending came in and they changed it around that you can do 3% down.
Okay.
So it's not, I would probably go for one of the first time home buyer programs before I go FHA.
Got it.
And the only time now FHA comes into play in my world is really if somebody doesn't want to have 20% down on a multifamily, like a 3 or 4 family.
Gotcha.
That would be the only reason why you would need FHA. But
Okay.
they really increased their fees, and their rates are not as low or lower than conventional financing nowadays, meaning like in 2022, as they used to be. It used to be like a 0.5% cheaper for FHA, so the mortgage insurance was a little higher. It was still cheaper, but now it's FHA requires no matter how long you own the loan, you have to have mortgage insurance.
Yeah.
Even if you have their loan for 10 years and you pay down the loan to show 20% equity, you got FHA loan for life, PMI for life.
Yeah.
You're paying mortgage insurance.
Gotcha.
So like FHA, whoever was running it within the government came out and said, hey, let's start charging these borrowers more. And they are.
Yeah.
So again, it goes back to trying to get the better deal, both financially, but also, purposely. I'll always not divert it to conventional financing, but conventional financing does as much, if not just as much, or if not more than what FHA allows.
Sounds like it. Yeah.
Yep.
Okay. Yeah. So one more question for you about on the lending side. Do you see that we're going to see another rate hike like in the next next quarter or so? Do you see that happening, or we're going to stay where we're at?
Mm-hmm.
Yeah.
Nope. So from a consumer's perspective, when you ask if I'm going to see another rate hike, the rate hikes that consumers see on like a 30-year fix are built in because the investment bankers are looking at a month away or a month and a half away and the effects of what that occurrence is going to have.
Okay.
So for example, the next meeting, it's pretty much guaranteed that the Fed's going to raise it 0.75% on their rates.
Okay.
Within the investment world. Now, right now, the rates are dipping. The rates are dipping in our world from the 30-year fix because the UK is starting to get their stuff together. The German Treasury, their inflation in Europe is starting to pull together and get control of it. So now those entities in Europe, like foreign entities, are now buying US Treasuries again. Where before, where they were in an inflationary crisis, twofold, threefold what we were experiencing, their price hikes were 70%. UK and the whole turmoil with their recent prime minister shift and their monetary policy being in disrepair, you might not know as a consumer that has a major effect on our mortgage rates here.
Gotcha.
Why? Because the United Kingdom and Germany and other foreign entities buy a lot of U.S. Treasury bonds. We got the 10-year note. When they stop doing that, rates go up because of the supply and demand factor. There is an anticipation that the Fed is going to raise the rates, whether it be 0.5 or 0.75%, consistently over the next meeting or two. That's not a fear for mortgage rates climbing, because as Germany and the UK are starting to get their quote stuff together, they're now starting to buy back US Treasury bonds, and we've actually seen a slight dip in rates over the last few days. When if there's fear of the rates increasing, why don't they go up?
Gotcha.
Well, because now people are starting to get their stuff together.
Okay.
And that's the best way to say it is do I see that the rates are going to go up? They might go up slightly a little bit, but it's not going to, I think it's going to stay in the 7% range, which is a correction. It's, the sustainability of a 2.5% mortgage is just too cheap for folks. And that's what the Fed has come in maybe a little bit too aggressive by raising their rates and kind of putting a little bit of a pinch on lending, whether that be for, credit cards or home equity line of credit or transition turns into mortgage rates. These different shifts are starting to work. And hopefully, they're talking about rates coming back down a little bit over the next couple of years.
Yeah.
So
like 24,
even though,
end of 24, 25 kind of deal. We should see some.
Yep.
Yeah.
Yep. I mean, I think it'll stay in the 7.5% interest rate range. The jumbo loans are cheaper. But it'll stay in this kind of 7.5% interest range for a little while. And then as people kind of recalibrate both professionally and personally their income and cash flow, I think that's when it's going to settle back down. And it has started to settle back down. It hasn't gone up any higher right now. That's the benefit.
Gotcha.
And so what most mortgage professionals and folks in real estate right now are saying is get into the property at the benefit of having a little bit of a slowdown. So your buyer's market's a little stronger.
Yep.
Yes, the rate is slightly higher, but look at the overall payment.
Yeah.
You're paying $3,500 a month in rent, and your future home purchase, even with a 7% mortgage, is $3,500. Why not go into homeownership? Because as you own the property, you can always refinance later without a penalty.
There it is. That's the incentive right there. Yeah, so I agree with you. I think it's the same thing. You should just jump in when you can, when the time is right, but you can also refine later, right? When things come down in the next couple of years, right? It makes sense. It makes sense. And I didn't know what you mentioned about, Germany and, Europe buying the treasuries. I didn't know that part, so that's why they add on. It's a security measure they're taking, like a precautionary measure they're taking, right? It sounds like, right? So that's really helpful. Jim, I know you're busy. You got a lot going on. We could definitely do this again at some point, but this was really helpful. Where do people find you? Before we wrap, I just want to know people where do they find you? Your social media handles.
Sure, anytime. You can look me up. It's either Bowtie Banker or J Kroll NYC. If you just simply Google my name, Jim Kroll, Jim Kroll Bowtie Banker. Fortunately, I've done enough of investment to get up there on a few of those page notches, so you should see me pretty easily.
Yeah, he's out there. He's definitely out there. You'll get him. Instagram, Facebook. I've seen you on Instagram. I follow you on Instagram, Bowtie Banker. Right, you can follow Jim there. Before I let you go, Jim, just real quick. This is like a speed round, right? Just 2 questions I'm going to ask you. Right, you tell me your bottom line about these 2 questions. Right, right now. In New York, people are kind of like saying, New York is coming back. It's going to be what it's always going to be. Everybody around the world knows New York is like the best city in the entire world, right? And one of the things that New York is known for is the restaurant industry, right? So one of the things I wonder on your day to day, right? And you know how it is, right? You grab and go. You got things to do, right? Are you would you still advocate for New York as being top in the restaurant industry as far as like places to go out and eat, or do you think there's another city that's got New York as beat?
I don't. Whenever I go out of New York City and I go out to the restaurant scene, I'm never impressed.
No.
Now I say that not with arrogance, but more confidence, because New York City has so many restaurants and so many choices that if you want Jamaican food, you want Northern Italy, you want Southern Italy, you want Thai, you want Indian, you just want Americana, just like bowl of chili. You've got every option that your heart is content with within a 10 or 15-minute subway ride.
Nice.
So the bottom line is on that, New York City still got the upper hand in the culinary scene. In my
hands
book.
down, right? Hands down.
Yeah, hands down. There's so many options. And if you don't like one, you don't ever go back, and there's 5 more that are just popping up around the corner.
Yeah, love that. Okay, best city to raise a family, right? Not the suburbs, but like the best city. Do you think, hands down? Because you've been around. If you lived in St. Croix, I would think you lived in Hawaii and you ended up at NYC, right? So, what do you think is the best city to raise a family in?
I mean, I gotta be a little bit prejudicial because I've raised my 2 kids here in New York City.
Yeah.
And I'm still in the city, living in an apartment that we're on top of each other and not at each other's throats and killing each other, made through pandemic, still married. So New York City is great because, like I said, you can go outside and hear the rhythms of the city on a regular basis, whether it's the construction workers, the cab drivers honking, or you get through the park and you start to hear actually birds chirping, and you might come across a Philharmonic presentation. So, New York City has so much culture and so much. The only other city that I probably would say that I would want to explore as an opportunity would be like Philadelphia.
Philadelphia, okay.
They're really friendly every time you go there.
Yeah,
like
brotherly love over there.
But still gives you a little bit of the urban flair.
Yeah, for sure. Okay, Philly is cool. I like Philly. I've been there a few times. Yeah, I like it. It's still a little outdated a little bit in certain areas, but it's kind of like it gives you that feel. You know what I mean? At least where I went to go hunting for a Philly cheesecake, we went to the hood behind the hood somewhere, and we got the best Philly cheesecake I've ever had. You have to go to the hood somewhere.
Like Geno's and Patsy's or something like that. That's in a derelict area. But I found that the food scene in Philly is also equally as diverse.
Yeah,
it's a little more spread out, but it's a great. Every time we've gone, and it's so close to New York City.
Yeah,
we've always had a great experience. How about yourself? Let me ask you those 2 questions. Let me flip the podcast on you.
Oh, all right. So best city.
So what's your bottom line for the best city to raise kids, and you think best city for food?
So where I've been, I'll be honest. I think I like Dallas. I like Dallas a lot. It's just the heat. It's hot, but the square footage that you get there and the city vibe that you get there, and it's also very diverse. And it's you've got this hospitality over there, where it's like everybody is very nice and like I don't know, polite, you know, and it is pretty diverse too. So I like Dallas a lot. I was there for maybe 3 weeks or so, visiting an uncle, and those guys are really laid back. They don't move fast. I mean, New York is a little hectic, right? Over there, it's kind of like laid back, and you kind of get that balance. So I liked it a lot. And I like Chicago too, but nothing beats New York. Like for me, New York, I don't think it's for me and my temperament the way I am. It's like I need that. If you say to me New York, I'm gonna be up in Westchester. You know what I mean? Like, you know, chill out. I don't want to be in the city too much. So yeah, so it's top. I think New York still is number 3 for me. It'll be number 3. Number 1 would be Dallas, just because it's different. 2 would be Chicago, and then New York, right? And then as far as the restaurant scene, New York hands down.
Yeah.
New York hands down. Nothing competes with New York. Nothing.
So true.
Yeah, and it's just the level of service, right? It's like the expectations are higher in New York. The level of service is better in New York. Not that there's not anything wrong anywhere else that I've been. New Yorkers get it. I think New Yorkers get it. Plus, the sanitation and the grades in the window, you know what you're getting. A lot of these places outside of New York, they don't even do the grades in the window. So it's like, you don't know what you're getting, right? So it can go in any way when they go to the restaurant industry. So definitely New York, hands down, man. Peter Luger's, can't beat Peter Luger's, right? Yeah. Old school.
Yeah. No, there's so many great steakhouses too, just for that matter. If you're not near Peter Luger's, you can find one where you are, and like, you know, there's New Yorkers are so opinionated as well.
Yeah,
these Yelps and different review websites are so true.
Right.
And it's like, you know, it's not just one disgruntled. You got to read a few of them, but just not just one disgruntled or one crazy bot trying to make money on the come.
Right.
You can get a real good feel for it. So I'm always a fan of New York City. I think we were talking about moving at one point, and my wife's like, you can't go anywhere else.
Nah.
You'll never be as set.
You guys are set. And the kids, you'd have to explain it to the kids. They probably wouldn't want to leave, right?
I know. My high schooler is a senior, so she's ready to go try a different city for college, but definitely does not want us moving because she wants to come back to this city.
There you go.
I don't need all that space anymore. If you move, you go to college, you don't need your room.
There you go.
It doesn't work like that.
Yeah, you can take the kid out of New York, but you can't take the New York out of the kid like that, right?
True.
There it is. Okay, last question for you, Jim. Last question for you. What is your bottom line? Your reoccurring truth that no matter what happens, this truth serves as rocket fuel for you to take you to the next level, right? What is your bottom line?
I would say that if you treat people with respect, you are always present and accurate and honest. No matter whatever challenges you face, you can face them with a positive and proper direction. You can cross that challenge, and every single time you run into a challenge, you learn from it. So therefore, you can mitigate further issues down the road. So my bottom line is to always be honest, always be present, and to be truthful about whatever the situation is, because you can always get past it.
Nice. Yeah, I like that. That's pretty straightforward, right? It's human to human, right? Yeah, this was great, Jim. Check out Jim Kroll, the Bowtie Banker, all right, on Instagram. It's not just talking about loans and lending. This guy's got life experience, you know, and he's accessible, right? This is what it's like just hanging out with Jim. It's always been like this with Jim, right? I'm glad that we finally caught up after all these years and we're able to reconnect on Instagram.
You guys, Jean-Jacques. It was a pleasure talking to you today. Look forward to doing it again soon.
Yes, sir. All right. Ladies and gentlemen, this was the Bottom Line Podcast, where we say what we mean and we mean what we say, because at the core of everything that is, was, and forever will be, there will always be the bottom line.